Good evening, ladies and gentlemen, and on behalf of Sunshine Holdings, welcome to the fourth quarter earnings webinar for the financial year FY22. To start with some housekeeping announcement, so just to let you know that this webinar will be recorded and we will post it up on our IR page so that you all can go back and look at it. All participants at the beginning will be muted, and participants can then unmute themselves and ask questions at the Q&A session. Participants can also raise their questions in the chat box, which I will moderate at the Q&A session. With that in mind, I would like to introduce our team from this end. We have Mr. Shyam Sathasivam, who is the Managing Director for Sunshine Consumer and Sunshine Healthcare. We have our Group CFO, Mr. Aruna Deeptikumar. We have Mr. Shantha Bandara, who is the CEO of Sunshine Pharma. We have Mr. Imtiaz Ali, who is CEO of Healthguard Pharmacy, which is the retail arm of the healthcare sector. We have Mr. Surit Pereira, who is the CEO of Sunshine Consumer, which has both tea and confectionery. And also we have Mr. Binesh Pananwala, who is the CEO of Watavala Plantation and Watavala Dairy. With that in mind, I would like to start with some corporate announcements which has taken place over the last quarter. As you know, we merged with Akbar Pharmaceuticals at the beginning of the year. As part of that post-merger integration plan, we have gone ahead and merged or amalgamated the two entities which house the agencies. So it's similar business. So as part of the PMI strategy and as part of extracting value and driving synergies in those businesses, we have gone together and put it all together in an amalgamation. You would have also seen an announcement on 31st March regarding the acquisition of Sunshine Tea. So this is predominantly a tea export business with revenues of about 4.5 billion a year and with a PAT margin of about 7% last year. So it mainly caters to foreign clients. They have value-added tea products as well as bulk products. And also the transaction, the cost was about 1.44 billion, and which is about a multiple of 3.6 times PER. I would like to also talk about the share swap between Sunshine Holdings and Akbar Brothers Limited. As I mentioned, we did a merger in the Sunshine Healthcare space where we gave Akbar Brothers a portion of our holding. We are exchanging that portion or stake for a new stake of Sunshine Holdings. So it's a private placement with about 8.8% new shares created of Sunshine Holdings. We recently, that is last Friday, we got shareholder approval through the AGM, and we hope to finalize that transaction this week. The share price for the subscription was 60 rupees per share. We also announced the acquisition or the signing of the SPA for Emerson International, which was a medical devices and lab equipment agency house. Given the current economic situations and the volatility in the country, our board has decided to hold that transaction. So that announcement was also made early April. So with that, I would like to hand over to Shyam Sathasivam to take you through the results. Shyam?
Thanks, Iran. Good evening, everyone. Thank you for being on this earnings call with us. Sunshine Holdings as a group has had a very good fourth quarter. With nearly 16% year-on-year growth in our revenue, driven by growth in our agribusiness and our healthcare business. Significant growth in both those sectors. Some challenges in our consumer business when it comes to revenue, primarily coming from our confectionery, as consumer demand challenges were experienced in Q4 in that end of the consumer business. But overall, the group has delivered 8 billion revenue for the quarter. Better results are in our earnings. PAT and PATMI has more than 100% growth from the previous year fourth quarter, and therefore good results for us overall. Going into the financial year 22, this quarter has led to that sort of excellent growth for us overall. We have a 30% plus growth in our revenues. We closed the year at 32 billion, which is a significant growth over the past year. We've had nearly a 320 basis points improvement in our EBIT margin, and this has been driven by both agri and healthcare improving their margins, which is of course then dropped down to PAT margin all the way to PATMI. So this has been significantly improvement for the financial year, closing at nearly 5 billion PAT and an EPS of 6 rupees and over. Of course, through the year, we've had the consolidation impact of the dainty business in consumer and the aqua pharma business in healthcare. So this is where the group has closed the year. I will hand over to my colleagues who run the individual businesses to take you through sector results, starting with the healthcare sector, our retail business, driven by Imtiaz Ali.
Thank you very much, Shan. Good afternoon, ladies and gentlemen. I will start my presentation by taking you through the performance of Healthguard Pharmacies for the quarter and the year. So Healthguard actually had a solid quarter, growing by 28% for the quarter and closing the year with a 33% growth. It was driven primarily by strong footfall into our outlets, almost 2 million visits because of Healthguard's brand strength and our focus on improving operations on the ground and executing operations on the ground, which led to better availability and better customer service. And if you really look at how the business grew, in what segments we grew, you will see that both in pharma, we grew at more than 39% in terms of revenue, and in terms of wellness, we grew more than 30+%. Overall, consumers continue to buy at a higher level. We saw basket per consumer growing at about 23%, and consumers continue to come into our locations, and we saw the footfall increase by almost 10%. We also saw solid, strong loyalty index across the year, with more than 90% of our customers being retained as loyalty customers for the year. So essentially, the strong brand strength and the operational execution at the ground really helped Healthguard deliver this solid performance. Thank you. I will now hand it over to my colleague Sayandan to take you through the medical devices performance.
Sayandan is actually not here, so I think Shanta will take you through the performance of the rest of healthcare. Shanta, over to you.
Thank you, Hiran. Good evening, everyone. I'm happy to take you through first our medical devices performance. First of all, I would like to just draw your attention to some of the highlights in the hospital channel where we operate mostly in our medical devices business. We see that over the quarters, some of the hospital occupancy has been improved in the last 2 quarters, especially Q4, as you may see. It has improved to about 80%. The utilization of rooms and occupancy have been fairly good compared to other quarters. Lab tests also have gone up, as you see, during the quarter compared to the previous 2-3 quarters. And also operation theaters had a slight drop from the previous quarters. This is mainly in the private hospital segment that we would like to share some insights for your information. And the medical devices business did very well and have grown by 23+% in the Q4 compared to the previous year quarter. And also this was mainly driven by our diagnostic and surgical segments, which has contributed very well for this growth. Moving on to our pharma manufacturing. Pharma manufacturing also had a growth of almost 7% compared to the previous year Q4. And we are focusing on contract manufacturing, and that has sort of given us some amount of growth in the quarter. And we are very happy to announce that our Lena Spiro plant was certified with GMP, and also 8 of our products, which are mainly the MDIs, which we were planning to launch, were approved by the NMRA. So this actually unfolds us a new chapter in our respiratory MDIs, that is meter-dosed inhalers. Hence, now we have actually commenced commercial production of the MDIs. And some of the challenges that we are facing, similar to some of the other pharma businesses in terms of medical devices imports and pharma imports, is the challenges in importing API, that is the active pharma ingredients, and some of the packing material because of the dollar crunch that we are all facing right now. Moving on to the pharmaceutical highlights and how we have performed. You may see that the red line here is Sunshine, and I'm very happy to announce that we have been managing ourselves very well in quarter to quarter, where we are actually been highlighted as the fastest growing pharma company in Sri Lanka, whereas we have been growing faster than the industry growth levels. Industry was growing at around 27%, whereas we have reported a growth of 29% for the quarter. And during the year, although now we are facing a dollar crunch and depreciation of rupee, during the year that in concern, we had the dollar quite stable. Hence, the increase of prices were only 9%, which was granted, also helped to improve our margins. However, we had challenges in terms of NMRA processes, which most of the industry faced during the quarter. Moving on to the results, overall healthcare business reported a growth of 23.5% for the quarter in terms of revenue. And we had a higher EBIT growth. You may see it is mainly coming from certain adjustments in provisions, especially gratuity with the changes in provisioning policy because of the increased retirement age. However, you may see that the PAT for the quarter is slightly lower than the previous year. This is mainly coming from the depreciation impact on finance accounts, where we have to account for the revaluation of creditors during the quarter. However, we had a wonderful year for the financial year 22, whereas the YTD numbers, you may see that we were able to grow our revenues by 37%, and PAT increase or rather growth is almost 30%, whereas we were able to hit a record P&L PAT number of 1 billion plus for the financial year. With that result, I would like to hand over to Surit to take you through the Sunshine Consumer results for the quarter. Surit, over to you.
Surit, I think you're on mute.
Good afternoon, everyone. So firstly, on the market shares. So market shares on quarter there have been ups and downs. So there has been in Q4 a minor reduction in market shares for both for us and for our main competitor. So we saw in Q4 that some regional players gained, so the others increased in terms of market share. However, for the year, it has been a good market share increase of 110 basis points. So we, according to the Cantor World Panel, we are at 48.9% share. In terms of growth, Q4 was impacted by two things. One was in Q3 is generally where our main competitor finishes their wholesale scheme. So we took a call to as much as possible block them in the wholesale and the small and medium trade channel. So we saw that getting impacted in for our sale in January. However, the biggest impact came for us in March, because March is our highest selling month. Almost 50% of the quarter comes from the March month. Now here there were two things that happened. We saw the consumer sentiment going down. More than that, we saw retailers reducing their stocks. Now this is in all channels, but mostly in the wholesale and SMMT channel. So that was one of the major reasons for the volume drop and the value drop in Q2. But however, because of the good performance in the previous quarters, we ended up with a 5.2% growth in FY22. Yeah, in confectionery, we had a revenue drop and also a market share drop because of the sales amalgamation, sales integration project that we did in July. So almost July to October, and also till December, kind of, there was an impact. However, now we see that the market shares are increasing. The sales was also impacted by the sales amalgamation project, but more than that, also through the because of the lockdowns. Because in May and July, August, if you recall, there were lockdowns, and this category gets much more affected than the tea category in when it comes to lockdowns. So value now, of course, the performance in terms of value as well as market shares has improved and is on the right track. Now, when it comes to price growth, now this is where we have seen significant price growth in both the categories that we operate. So in tea, we have seen price growth happening, and this is for two reasons. One main reason is volumes coming down because of some of the estates not applying fertilizer. And the other thing is, of course, the dollar appreciation. Now, actually the dollar appreciation gives an advantage to exporters. So that is the reason why with the dollar appreciation also impacts price in the local market. Now, this is up to March, but the real increase came in April. It's a significant, a very steep increase we saw in April. So here we have increased price, but not in line with market. So we have taken a 4% increase and then, a 12% increase, 4% increase and 8% increase. And we are looking at more price increases that we will take. We've taken one in April and also one we will be taking in June. So because of the tea price increases. However, you see that we haven't been able to pass all the costs down to the consumer. So there has also been a bit of a margin hit. In confectionery, also we have seen significant increase in sugar, liquid glucose, and our major raw materials. And you see the cost increasing. Here we have just put the sugar price increasing, the market price into the exchange rate. And we have just taken one of our main products, how it has increased. So most of our sweets and toffees, etc., we have from 2 rupees, we have gone to 3 rupees, and now we are almost going into 5 rupees. So this has been the challenge that we have had with costs. So coming into results, so overall in revenue in Q4, it has been a minus 6.6. That is from tea almost minus 7.5, and then the balance from confectionery, about minus 2% from confectionery. So here, whilst the revenue has gone down, you see that the EBIT margin has improved. So this is mainly on account of price increases and the overhead reductions that have taken place. So the biggest challenges for us, as I mentioned, is the raw material cost increase, and of course it has continued to increase with the exchange rate. However, with the exchange rate stabilizing now, it will depend on world market prices. And on PAT, also you see a significant growth in PAT. That is also includes some tax benefits that came about. If not, the PAT increase is about 11.6% year on year. So it has been a tough, essentially the second half for the consumer business. And however, for the year, there has been you see that there has been a revenue growth of 13% and a PAT of 2.6%. Yes, with that, I will hand you over to Binesh to take you through the agribusiness.
Thank you, Surit. Good evening to everyone. I will take you through the agribusiness, which is dairy as well as the oil palm. In terms of the market, we have seen a steady increase in the market in terms of the world market price, where the palm oil price have been increased. There have been certain changes in the world market, which is like at one time, Indonesia brought in export ban, and which have been withdrawn last week. So therefore, the prices have been up and down, and the demand have been growing. So the prices reach the top in month of May in terms of the world market, and then there is a 38% increase. But when it comes to the Sri Lankan market, that there is a steady increase due to the world market price increase, and also the special commodity levy price, which have SCL, which have been in operation since June last year. There had not been a change since then. So the prices have been quite steady. Apart from the market factor, the other factor for what oil plantation do well is the increase in crop, which is coming in two-prong, bought crop and all that. So that's the reason that it has gone up. So moving on to the revenue, the quarter, when it comes to the fourth quarter, we have an increase of 50% almost. So from last year to the current year. Similarly, the year end, it has been 64% over last year, 21 to 22. In terms of EBIT, the same thing follows, and also on an EBIT margin of the Q4, it has been 33%, and FY22, it's 51% on EBIT margin. So we ended up with a recorded PAT for the year 2022 as against 21. Then also the quarter for Q4 have been a better quarter for us during the year. So as I mentioned, in terms of the challenges in terms of the dairy industry, We have been having certain issues with regard to increase in prices, etc. But despite of all that, the average herd we have been maintaining at 1,830 with a milking herd of 723, which have moved up further up. Then in the month of November, we imported 127 pregnant heifers, which they have started calving now, and then they are in production as of now. In terms of the dairy, as I mentioned, that it has been a challenging quarter, especially the third quarter as well as the fourth quarter. It has been a challenging quarter in terms of the feed cost and availability of feed cost. But overall, for agribusiness, it has been a very good year, and I think in all areas, all division departments, the agribusiness has done well. So moving on to value addition or the downstream, the pride of Lonach, which is now it's moving up, and then we see increase in demand, especially with the current situation of non-availability of milk, food, etc. We see an increase in the literage and also the number of bottles which are selling. So we are listed in most of the modern trade outlets in and around Colombo, except for one modern trade chain. And also that we have removed the 500 ml full cream from the modern trade due to its non-viability of putting it, taking into the current cost, etc. And also that the volume sold increased by 38% when compared with the third quarter 22, the fourth quarter, and again we see a huge good momentum in the current quarter as well. So there will be a good demand mainly due to the quality of the milk, the single source farm milk which is coming in. Therefore, the demand is growing, and also the milk powder prices have gone up. Now I will hand over back to Hiran to take you through the rest of the proceedings.
Thanks, Vinesh. And moving on to Q&A, we can unmute yourself and ask question, or maybe use the chat function and I will moderate those questions. So, hi everyone. So if anybody has any questions, they can post it on the chat, and our team can answer based on their respective areas. Okay. Yeah. How is the rising interest rate affecting you? I think Aruna will be able to take that on.
Sure. Yes. Thank you, Jan. Actually, interest
cost is rising and now it's at around 20%. So mostly our borrowings are going into the working capital management. So, but our strategy is to minimize the cost of borrowing in an alternative approach in terms of utilizing pooling the cash of the group. Some of the activities we are working on.
Thanks, Aruna. I think there's a question from Imalka on the new acquisition of the tea export business. I think, as I mentioned, last year it did about 4.5 billion worth of revenue for the year. I think we can expect single-digit growth to continue over the next quarter, and with an EBIT margin of about ranging from 6 to 8%. I think we have a question for Binesh. Is your dairy distribution outsourced? Binesh, you want to elaborate?
No, it's not outsourced yet. I think we are doing it by in-house. We have our team who does the distribution, home delivery as well as for the HoReCa channel.
Thanks, Binesh. What percentage of borrowing are in cash and cash are in foreign currencies? You want to take that? I think nothing is in.
Yeah. Regard to the foreign currencies, actually, we don't have foreign currency at the moment because we have fully utilized those for import business, and we don't keep foreign currency as cash. And in terms of borrowing and cash, it's about.
Yeah. So in terms of leverage, I think long-term debt, we have one loan from IFC, which is about $5 million. But that comes with a rupee exchange rate hedge when we took the loan. So it's not exposed to the currency. So in that sense, the answer to that question is effectively our entire borrowing is in rupees. I think as a hot question on taxes, I think Aruna can take it. The question is, with the amended tax rate yesterday, how is it going to impact the overall business during the upcoming quarters?
Yeah, actually too early to comment that, but based on the nature or tax type, I can explain mainly the income tax rate has gone up to 30%, which has about from the standard rate 24 to 6 increased by 6%, which will have an impact for the tax cost to the group. And with regard to VAT, actually we collect it and pay to the government. So there's no major impact unless there is a disallowed input rate.
Thanks, Aruna. I think we have one more question on dairy. Binesh, if you can take this, how is the how will revenue grow with the expansion of the herd in Wattavala dairy? Can you give some color as to what's going to happen?
Yeah, with the additional herd that what we have got in 130 numbers, we expect about 8% revenue growth in the coming year. But there have been a delay in them calving, and there will be a slight delay, but our expectation is about 8%.
Thanks, Vinesh. I think Naveen has some questions on the confectionery sector. I think Surit might be able to take this. What are you seeing in terms of volume growth or contraction in the confectionery business? And the second part is, what's the reach of the confectionery products in terms of number of general trade outlets reached?
Yeah, so we reach about 60,000 outlets for confectionery. Actually, it's both tea and confectionery are very similar in reach. In terms of volume growth, yeah, we have seen, especially in the second half, because the first half I'll leave out because it was affected by the the lockdowns, etc. So we saw with the price increases happening, about a 20% sometimes volume drop happening, but it settled down at about 15% volume drop. But with the price increases, the revenue, there was a growth overall in the second half.
Thanks, Surit. I think another question from Naveen was on the acquisition of Jameson International. Is this a hold or completely out? Shyam?
Sure. So I think the reason we decided to pull out of the Jameson's acquisition was the deteriorating environment in terms of the overall sector, because this business, being primarily in medical devices, the largest customer was the government. And with the concern we had of government's ability to pay and sort of upgrade, etc., we took a call that we should, walk away at this point. For as of now, we've closed on it. I think the situation will get worse before it gets better. So for now, we will sort of curtail supplies to the government sector.
Thanks, Shyam. I think that's a question from Deshan. What percentage of loans reflect floating rate at the moment? And what is the overall percentage of foreign loan outstanding as of now? So basically, the floating ones are mostly the OD and the short-term funding, and that as a group accounts for about slightly 50 to 55% of our borrowings. So mainly obviously for working capital. In terms of foreign loans, as I mentioned, we have the IFC loan in the consumer sector, which is about 1.1 billion outstanding in rupee terms. As I mentioned earlier, it's obviously hedged, so the exposure is in rupees. We have a question from Hassan. What percentage of healthcare revenue under price control? And what is the rough breakdown of healthcare revenue in terms of pharma, devices, and wellness? Shanta, would you mind taking that?
Yes, Hiran. In terms of the impact on price controls, we have nearly about 40% plus products under the gazettes. So therefore, 40% of our revenues are under gazette. However, just to keep you all informed, in fact, 100% of the prices are under control of NMRA and 40% is gazetted, whereas any price increase has to be actually granted through NMRA. So that's sort of the composition of the gazette and non-gazetted, I would say, whereas everything is under control. Segmentation information I don't have with me. Hiran, would you want to?
Yeah, I think broadly, Hassan, we break it down by pharma, medical devices, retail, and manufacturing. So pharma accounts to about 55, then medical devices another 25. Healthguard, which is retail, is about 10, and the balance for manufacturing. Moving on to the next question, at group level, admin cost has increased to 800 million in 4Q from 600 million, I'm assuming last year. Is there a specific reason for this? Aruna?
There are multiple reasons, but I can highlight one point is that where last year, there's the pharmaceutical group cost overhead was also included in the current quarter. That is one reason, and other one is some of the cost escalation that dialed in the Q1 as well. There is an inflationary effect.
Okay, thanks, Aruna. We have one for Binesh from JBS. What is the average age of your palm oil trees? Binesh, can you take that?
Yeah, Iran. We have about 34% of our extent is coming under younger category, which have been planted less than 7 years. Then we have our prime age is around 60%. The rest is about 6-7% is the tall palm or the declining stage palms. So majority we have palms which are less than 20 years. So that's a category which is going, and primate category is much higher currently.
Thanks, Minesh. Okay, so are there any other questions we can answer? I think it's time for us to wrap this session up. On behalf of the team at Sunshine, I would like to thank each and every one of you who has participated and engaged with us today. Hope to see you all on our first quarter webinar coming up in a quarter. Have a good day. Thank you.
Thank you.
Thank you.